It's about that time of day again. My name is Joseph. Monday evening, August the 6th. Welcome back to your nightly newsletter. My job is to help new traders earn consistent profits using a simple and reliable trading strategy. And my plan this evening is to identify the most reliable trading opportunities, setting up for tomorrow's trading session. And tonight, I'm covering crude oil, S&P, Nasdaq, gold, and euro. Now, starting off this evening with crude oil, crude is bullish with a spike in range pattern. And of course, knowing that, I've got my eyes on the pendulum swing for the most reliable buying opportunities tomorrow morning. On the S&P is bullish with a spike in channel pattern tonight. And that tells me to look for buying opportunities using failure patterns down at the lows of that channel tomorrow. Don't forget the Nasdaq, though. The Nasdaq is bullish and trading up at the high of its channel tonight. But I've got my eyes on buying a pullback down at the lows, and I've got three major support levels coming together down to those lows tomorrow on the Nasdaq. You definitely want to stay tuned for more on that later on in the video. Gold is bearish and trying to finish last week's market objective, and the big clue is a short-term trading range because that tells me to avoid selling low and focus on selling opportunities up at the highs tomorrow. Last but not least, cannot forget about that euro. The euro is bearish. I've got three clues on the chart tonight. Tell me to focus on selling up above those highs of a channel for the most reliable opportunities tomorrow morning. Speaking of tomorrow morning, we're just getting this week started. I've got a great newsletter in store for you guys and gals tonight. Plenty of reliable trading opportunities setting up for tomorrow's session. But before we open the calendar, before we open the charts, before we put the whole plan together, I need to remind you, if you're watching me this evening on YouTube, you can find a detailed description of this entire trading strategy written out right here on my blog at Sideways Markets. I'll leave all the links in the description of this YouTube video. Also, if you have any questions about anything covered in this video tonight, please remember you can post those questions in the comment section below. And if you like what you see, please help support this channel by subscribing and make sure you hit the bell icon so you get notified every time I post another video. And don't forget, if you really want to stay in tune with everything we do here at School of Trade, head over here to the blog at sidewaysmarkets.com. This is where all the action happens every day, and make sure you join our mailing list. That's right, very easy. Give me your name and your email address, and I'll send you an email every time I publish something new. If you're on social, StockTwits, Twitter, Facebook, LinkedIn, you can follow me on social in the lower left-hand corner. And don't forget all the charts from tonight's video. How easy is this? All the charts in the video tonight, you can download them and have them ready on your computer. There's a link right below the video tonight on the blog. Follow that link and grab those charts ready for tomorrow's session. And speaking of tomorrow's session, how about that free pass? If you're not a member here at School of Trade, I got a free pass for you. Come out and join me as a guest in the trade room. Grab that free pass in the upper right-hand corner and come learn the strategy with me tomorrow as a guest. Don't forget, any questions, you can always call the number, call the toll-free number to our office. You can always drop me a live support on the right-hand side or post a comment right in the comment section below. All right, guys. And once again, hope you guys had a great weekend out there. We are back in the action here again. It was a great weekend, wasn't it? We only get so many of these amazing summertime weekends here in the Northern Hemisphere, and boy, oh boy, did I try to use the most of it this week, and hope you guys did as well. Tomorrow morning, Tuesday, August the 7th, what do we have here on the schedule for tomorrow? Tomorrow, not much on the schedule tomorrow. We got that JOLTS report at 10 a.m. Eastern time. So it does look like that job openings, layoffs, and transfer survey, which is known as one of the big up-and-coming jobs reports, right? That number is tomorrow morning at 10 o'clock Eastern time. And as always, whenever I think about 10 o'clock, I always think about that 10 o'clock shock. We usually see a good jump either up or down. Sometimes it reverses at 10 o'clock. We oftentimes see a lot of volatility, kind of unexpected volatility, but it happens usually around 10 o'clock Eastern time. So keep an eye out tomorrow for that big jolt tomorrow around that 10 o'clock shock, top of the hour there at 10 a.m. That's the only news we have to worry about here for tomorrow. And you can see it's a pretty light week overall, right? This is the second week of the month. The second week of the month is usually a relatively light week as the markets are processing last month's GDP, and of course last Friday's non-farm payroll number. Wednesday, we're going to hear from the petroleum status report for all you crude traders out there. We got some inflation numbers coming in on Thursday, so euro and gold are definitely on our radar, and of course more inflation, the CPI number on Friday. So gold and euro should be or any currency for that matter, right, should definitely be on your radar later on in the week. Oil, of course, on Wednesday. Not a lot tomorrow again, right? JOLTS report at 10 a.m. Eastern time, so keeping an eye out tomorrow morning around that 10 o'clock top of the hour. All right, so that's the schedule here for tomorrow. Let's jump into some charts here right now. Let's get this party rolling here this evening. Got a lot to cover here tonight. We got crude oil, S&P, Nasdaq, gold, and euro. Let's start off first tonight with the crude oil. Crude is bullish with a major spike in channel, a minor spike in range, a strong bear move off the highs, and a measured move on the chart this evening. The major spike in channel tells me that price is trying to rotate back down to the low of that channel, right, where buyers will likely come in and try to buy coming up off that low, right? So major spike in channel tells me to expect some major support, right, down around the low of that channel tomorrow. The spike in range pattern, though, small spike up, double top, that gives me that spike and range pattern. Let's make that a little bit smaller there, right? That spike and range pattern, we talked about this last week, right? The amount of the overshoot of the range is the amount of the overshoot on the opposite side, right? We saw an example of that on gold last week on this newsletter. So the amount of the overshoot, right, we rotate above the high, rotate below the low. That 68, 69 area is a definite, right, level of support as well. But the big clue here right now is this strong move coming off that high, right? The strength of that move, that has enough momentum behind it to send this price all the way down to the spike and channel lows, which basically tells me I do want to buy the low of this range. I do want to be a buyer right now, but I don't want to buy right now because that momentum is just a little bit too strong, and I want to wait for those sellers to absorb that momentum so I can then use it going back up to retest the high. And then, of course, last but not least, the big target here for later on this week, right above that $70 a barrel. They missed it by just a couple ticks earlier on this morning. We have to assume that measured move is the big target, right, for those bulls tomorrow. So again, we get the spike in channel. I want to buy off the low of that channel, but honestly, we may not get down that far tomorrow. We had that spike in range pattern, and that spike in range pattern, in my opinion, is ultimately the big clue here right now, because as we go up, we pull back, we double top, that creates that range. We found this earlier today in the trade room. Buyers, of course, came in to buy, right, the low of that range. Buyers couldn't continue above the high of the range. That creates a breakout failure. The amount of the break above is the amount of the break below. So this area right here is really looking good here, right, for a buying opportunity. In fact, you could actually look at this and say, you know what, this whole area here, if you kind of want to extend this out a little bit further, this whole area there, right, could be seen really as that buy zone. If you want to get a little more, a little more particular on that battle zone. So with that said, the key here is we're overall bullish, but look at the strong move down. Now, anytime we see a strong move in one direction, what usually happens? We usually see a pullback and a second leg. And you can see an example of that, right? Strong move up. What do you expect? A pullback and a second leg, right? Strong move up. What do you expect? A pullback and an attempt second leg. They don't always succeed, but you do expect to see those, again, two examples here. One strong move up, pull back and go, one strong move up, pull back and go. Sometimes successful, sometimes they're not. But the most important thing, remember, is that anytime I see a strong move in one direction, what do we expect? We expect those sellers are going to try to sell that next pullback. Now, will they be successful? Well, what direction is momentum moving in right now? It's a bull market, right? So would you think the odds are on their side? Probably not, right? The odds are definitely not on the side of these sellers. So that pretty much leads me into my plan for tomorrow, right? I want to buy down here, but because the momentum on this is so strong, I'm going to have to respect that momentum, wait for the pullback, right? And then we can go looking from there. It really all comes down to, do we go lower or do we go right back up into the range? That's what it pretty much comes into, right? It's what it pretty much boils down to right now. Scenario one, which is what we're hoping for in the short term. I want to see sellers now try to sell off that moving average. Again, it's a strong move down. We should see the bears try to sell off that moving average. Once I see those bears take the bait on that second leg lower, now I know where their stops are. Once I know where their stops are, I know the market momentum is bullish, I know I'm down around support, all I have to do now is buy into those stops, right, of those sellers, right? So I'm buying into their failure. That failure will lead to strength. That strength will then lead right into a bull pullback as I try to buy that market going higher here. So again, I've got a strong move down. I'm going to wait and let those sellers try to sell that pullback. If I can get the failure, looking for that seller failure into bullish strength, I'm not going to chase the bull strength. I'll look for that bull pullback pattern as we go higher. That is what I call a one try, two try failure, a seller failure pattern, right, into a bull pullback pattern as we go higher here. Now, what if they hold that pullback? What if we go lower here? Right? What if they hold that pullback now, right? So now we expect to see them selling off right off that pullback. Now they hold it and we run lower. Now what happens? This market is too bearish now to buy a failure. So now the plan changes a little bit. Now that failure that same failure pattern is not reliable enough. Now I have to wait for a strong move up, right? How strong? How strong? Well, I like to always look for a new channel here and buy that pullback off a hidden channel, right, and that reversal off that low. So if we do end up down the low of that spike in channel, the momentum will be too strong to the downside for me just to buy off that low. So I've got to wait for that momentum to get absorbed and then use it in my favor, use that new channel, that hidden channel, right, into that bull pullback for that run back higher here. Now, what if we go higher here, right? What if we just run, right, back up going higher? If we run back up going higher, we have to remember there's a level of resistance up here, and we don't want to be buying into that level of resistance. What I'm looking for here is if we run, I'm looking for that strong move up, and I want to see that two-legged pullback, right, into that rising trend line or that rising moving average. I want the moving average up above that 60 area, and that'll be my sign, right, to get aggressive with that target up around that 70, right, 33. So three basic scenarios right now. One is a two-try failure into strength, pull back and go. The second is going to be a continuation into a, again, no failure pattern, but a pullback pattern, right, coming off of that low. And again, I want to use that kind of hidden channel technique there. And then, of course, again, if we just run higher here, looking for that deep pullback, get that moving average to hold above that channel, look at that continuation as we go higher up to that measured move. Last but not least here, how do we reverse? What does a reversal look like? Well, again, as I mentioned earlier, this momentum is strong enough right now that if it holds that pullback, right, if we hold that pullback and run, well, yeah, now we become a bear market. At that point now, I'll find my new channel. I'll find that new channel high, and we'll look to sell off that channel high. Got to be strong, though. We're going to have to see some strength going lower here, or else the buyers, they're going to gobble this thing up off that low, and we're going to go right back up, right, to retest that high. Now, real quickly here, are you here for the first time today? If you're here for the first time on this nightly newsletter, it is great to have the opportunity to work with you every evening on the newsletter, but I realize I'm covering a lot of terminology, a lot of patterns, a lot of stuff that you probably haven't heard of before. I look at the markets a lot differently than most of the old school trading books. I'm self-taught. I never really had any professional training. So for me, I use different terminology. I use different patterns. The strategy is excellent, but I want to make sure you get all the pieces to this so you can make the most of our time together. And to do that, I'm going to give you a free trading course in the upper right-hand corner. I'll put all the links, the description of the YouTube video as well. So grab it in the upper right-hand corner, right, or grab it in the description of this video right now on YouTube. But the bottom line is you could go back and watch all my old newsletter videos, but I want to give you a shortcut, and that's that free trading course in the upper right-hand corner. That will teach you all the terminology, all the analysis, my favorite markets, my favorite patterns. That way you can really benefit from our time every evening on this nightly newsletter. Sound like a deal? Yeah, pretty good deal, right? So grab that free course, upper right-hand corner, right, and learn more. Get that deeper dive into this trading strategy. Let's keep going. We've got the plan there now for the bulls and the bears on the oil. About some S&P. Yeah, the S&P is bullish with a spike in channel pattern tonight, the prior month high, and of course a short-term trading range on the chart this evening. The prior month high reminds me that buying now will be buying too high, and I'm wise to wait for buying opportunities after a deep pullback. The bull spike in channel tells me to look for buying opportunities using a deep pullback off the highs, and the trading range, right? That trading range makes for additional support where I can focus on waiting for buying opportunities using the 2-try rule and a seller failure pattern, right, tomorrow morning. So the key really comes down to, right, this strong move higher, right, into this channel, right? That channel, you'll notice where we are right now, we're right at that prior month high. We're all the way back up to that high, right, from almost the end of July, right? So that big collapse at the end of the month last month has now evaporated, and we're now back up to retest that high. What that tells me is it's way too high right now. It's way too high to buy. I want to buy low. Now, where can I buy low? Well, that's a good question. Here comes our channel, right? This is what we call a spiking channel, a spike up into a channel. Now, the most important thing you want to remember about a spiking channel is to look for and not get spooked by a deep pullback, right? A deep pullback. Now, deep pullbacks happen in spike and channel patterns because you'll notice we haven't seen a deep pullback yet, right? We haven't seen that strong move up, nice deep pullback, right, and a retest of that high. It's pretty much been grinding its way higher, in a matter of speaking, right, ever since we came out of that big rally just after the beginning of August. So that spike in channel tells me deep pullback, right? Deep pullback. And in fact, it could be as deep as this hidden channel down here. We're up to take these trend line off the highs and bring it up to that low, right? So it could be as deep as that trend line all the way down around that 28.30 to 28.25 area. It could be that deep, right? So we definitely expect it to be a deep pullback. I'm going to zoom in on this though, because I think the most important clue is this trading range, right? Today's session on the S&P, when you look at it from this bigger picture, you can see we got some double tops, we got double bottoms. I always like trading ranges because trading ranges always act as magnets. This is where the most amount of volume was. If you were to put a volume profile on the right-hand side of this chart, right, it would most likely look like that, right, where the most amount of volume is piled up right in around that range. Anytime you get a flat moving average, anytime you've got overlapping candlesticks, you can expect there to be a lot of volume. A lot of trades back and forth, right, in that area. And anytime there's a lot of volume, that's usually where the market pulls back. So we know we're too high to buy right now. We know we have a bull spike in channel. That tells me deep pullback. And we know we have a trading range. So basically, there are a couple different scenarios you want to be aware of. One is going to be a shallow pullback. The other is going to be kind of a medium pullback, right? And then the last one here is going to be, right, that really deep pullback. Now, they're all kind of the same, except the deep pullback, the market, as you can imagine, will be bearish at that time. And so we'll have to wait for a little bit different pattern to get in off of that low. Let's break this down. Now, I've got my eyes, again, on the top of this trading range here. We'll call it 28.43. That lines up nicely with the low of that channel. So the shallow pullback right now, as we pull back, we're going to be below that moving average. And which means as that moving average comes down now, we assume that sellers are going to try to reverse that trend, right? And they might be successful at that, and we'll talk about that in just a moment. But for now though, I can be a buyer into that failure for those sellers. Don't chase after it. Look for that pullback pattern, right? We'll buy the pullback right off of that low. So basically, it's that seller failure into bull pullback. Same basic strategy that I talked about on the oil, right? It's a bull market. I want to buy low. But when we pull back, right, this is likely going to confuse those sellers into thinking the market, right, is bearish. I'm looking for them to take the bait. I want to see those sellers try to sell at the moving average. If they do, I know where my stops are. I can buy into those stops. I can buy the pullback, right, for that move up to retest that high tomorrow. What if we go lower here? What if we go down to the low of that range? Because remember, we got that spike and channel pattern. Oftentimes, that produces some really deep pullbacks. At this point now, we'll go strength, pullback, strength. If we find our way all the way down to that low, now it's too bearish to buy that failure. What I'm looking for now is going to be that move up above. And again, I like to go out and kind of find a hidden channel on that, right? And look to buy that pullback from there. Target, of course, is back up to retest that high, right? So pretty easy, right? Pretty easy there. Okay, again, if we end up back down at the low of that range, right, down the deepest part of that battle zone, the momentum will probably be a little bit too bearish just to buy a failure pattern. So we'll wait for the failure, and then we'll look to buy that pullback. That will usually be, right, a lot more reliable pattern for us. And as you can imagine, the same thing goes, right, if we end up back down to that low. If we end up back down to that low, this market will be very, very bearish at that point, right? If we end up back down to this low at this point now, there's probably going to be a bear channel here, right? And at this point now, we want to break out the 2-try rule. And here's how the 2-try rule can be used here. Here's the way I like to use it in these environments. I want to get up, let those bears try once, let them try twice. I'm looking for, and again, I'll teach you more about this in that free trading course, right, upper right-hand corner, or in the description of the YouTube video, right? Grab that free trading course. But this is where we can look for those sellers to try once, sellers try twice, get above that moving average. You've got support coming in. That's the buy right there. That's the buy right there. That's the good stuff. Again, it'll be too bearish at those lows, right? It'll be too bearish at that low. You don't want to try to buy a failure pattern there because momentum will be too strong. You want to let those sellers exhaust themselves, right? Let them try once, let them try twice. And then once we see us get back above that moving average, second try failure, beautiful pattern, right, for an entry long, going back up, right, to retest that high. Now, how about if we go sideways here? Because you can see we're starting to get a little bit, yeah, see, it's looking a lot like a spike and wedge or a spike in range right now. We talked about this last week on the newsletter. If we keep going sideways here, in other words, if we don't see any profit taking, there's no pullback, if this continues with a trading range, double tops, double bottoms, the plan is the same as we talked about earlier on oil, right? I want to see us go lower. That's a 1 try. I want to see a 2nd try, and I'll look for those 2nd try failures, right? Whenever we have a trading range, we want to follow the direction of the bull bias, and then 1 try, 2 try, look for that buy off that 2nd try failure. Again, you'll learn a lot more about this 2-try rule, as I call it, right, inside that free trading course in the upper right-hand corner. So that's the plan if we go sideways. If we keep going higher here tomorrow, if we keep going higher here, that becomes a spike in channel. I'll be looking for that pull back down to the low of that bigger channel, seller failure. Remember, when the market's bearish, I can take this as a seller failure, right? I can take that as a seller failure. I can take that as a buyer pullback. I can take the failure pattern. If I'm buying with a seller failure, I can take that failure pattern as long as I'm going with the direction of that momentum, right? It's not until we really see the market turn bearish, now I can't take that failure pattern. That's not a reliable pattern. I'd rather wait for it to jump, find that new channel and buy off that channel. It's a much more reliable trade than trying to pick a bottom, right, in what would be at that point a very bear market. So plenty of options here on the S&P. Now you guys have a good plan, and again, lots of examples of a 2-try rule setting up on the Emini for tomorrow. From one Emini to another Emini, here's the Nasdaq. Nasdaq is bullish with a channel, a measured move, reversal line, and a trading range on the chart this evening. Very similar here, very similar to the S&P, but very different at the same time. The bull channel, right? This bull channel we can see here, making our way higher here. That bull channel tells me we've got great rotation, right? And I'm gonna look for buying opportunities off the lows, right, of that bull channel. Well, the low of that channel also lines up nicely here, right, with that reversal line at 23.25, right? And of course, don't forget about that trading range either, right? Double tops, double bottoms, there's your trading range. That all lines up nicely. The top of that range lines up with that reversal line, which lines up at the bottom of that channel. This whole area here now, between that 23.25 down to 20 even, that whole area is really on my radar here for tomorrow. And much like we talked about on the S&P, you're really thinking the market's bullish. So I want to buy low at support levels, right, with a big open space overhead for a target. And the low of the channel, right, combined with that reversal line and the range high, that appears to be a great spot here for us. So shallow pullbacks to the top of that range, deeper pullbacks to the low of that range, and then potentially a full-blown reversal, right, if those buyers can't hold these pullbacks. So again, I'm keeping my eyes on that 23.25 area. As we pull back here, I'm looking for that seller failure. Remember, it's a bull market, so seller failure works into strength. I don't want to take the strength. I want to buy the pullback, right? Buy that pullback. That is a 2-try seller failure, right, into a bull strength pullback, right, to retest that high. Beautiful example there. And then where would the next target be at that point? The next target now, I've got one leg, I have 2 legs. Yep, the next target now, depending on how far we pull back, if I take that first leg, second leg, let's say we pull back to that top of that range, right? The target now becomes that 81.75, 81.5 area. Right, again, if we pull back down to the top of that range. If it's a deeper pullback, it's even shallower than that, right? So you want to use that first leg, and that will anticipate now where that final target will be, right, for that NASDAQ tomorrow, right? So 1 try, 2 try, failure, strength, pullback, and go. That's easy, right? What else looking for here? What if we end up down the low of that range? If we go to the low of that range, it's probably going to be a relatively bear market here, right? If we get down to the low of this trading range down, it'll probably be a pretty bearish market. So at that point now, rather than just simply trying to buy the failure here, I'd much rather take my time, wait for that new channel, right, and buy the low of that channel, right? That would be my next priority from there. And then ultimately from there, guys, right, if we continue going lower, right, 1, 2, right, if we're going lower here, I'll look for a hidden channel here, right, and look to combine the low of that range, right, along with a hidden channel high, and that'll be a selling opportunity for us, right? So that would really be the only real easy sell, would be after we clear through that range, because again, at this point, you're trying to make sure the buyers aren't going to buy this dip, and they most likely will, right? But if we can push through, then we'll find that new hidden channel, we'll sell the top of that channel, right, and try to get that target down around, right, that 73.62 area. So relatively easy here in the pullback, right? Pull back, failure, strength, up we go, right? Pull back, 1 try, 2 try, hidden channel, right? Buy off that low. And again, you'll learn more about the 2-try rule, hidden channels, right? Everything we talk about on this nightly news. You can learn more by taking that free trading course in the upper right-hand corner, right? Or grab the description, grab that link and register in the description of this YouTube video. Last but not least, what if we go sideways here? You know, bit of a double top there. What if we pull back? We run, right? We run back up and pull back off that high. What if we start seeing double tops and double bottoms here? Then what? Well, it's very similar to what we talked about earlier on crude, right? We want to go below the range low. It's a bull bias, so I want to buy down below these lows, right? I want to buy down below those lows, and to do that, I'm looking for 1 try, 2 try, right? That's why I call it 2-try rule. When it comes to ranges, it's so important here, right? 1 try, 2 try, and then failure, strength, pullback, and back up in. All those will work as long as we don't turn bearish, right? As long as we don't get that momentum running back down towards the low of that range, right? So it's really going to be important to watch closely as this market pulls back right below that moving average. Do we see that? Do we see that strength, pullback strength, which will signify this as being a bear market? If we do, then we've got to wait for that 1 try, 2 try, then up, right, and buy that pullback from there, right? Or we really get it running here, strength, pullback, strength, right? We really run, mark up that new channel. If you can get that new channel to line up right off the high of that or the low of that range, that'll be a good sell for us as well. But again, that will take a little bit of time to wait and see how that goes right here for tomorrow. So Nasdaq looking very bullish, looking for a deep pullback right now. Got a big measured move waiting overhead if we can get through it. And again, really right now, it's all about finding those areas of support, right, and buying off those levels of support. How about some gold? Gold is bearish with a long-term channel, a measured move, and what appears to be a short-term trading range of the chart this evening. The bear channel had an overshoot into an overshoot to finish last week. If you don't recall, right, if you recall, this is the channel we talked about last week, right? And last Thursday evening, we talked about that overshoot reversal. Remember that? They had so much momentum. We spent pretty much the entire session last Friday as a bull market because of that overshoot reversal. Well, as you can see, though, the buyers couldn't keep it, right? They end up failing and going back down in, right? So now those sellers are trying to finish this move down to that market's objective at 12.5, which is also lining up perfectly with a measured move. I've got 1 leg, 2 legs. That second leg did overshoot a bit. And third leg, look where the third leg puts us, right at that measured move. So I have to assume the sellers want to go down to that 12, right, that 12.5. That measured move is also going to be, right, a major level of support there as well, right? But the big clue here, the big clue is this potential short-term trading range. You can see today's session ended with what looks like a rejection off the lows, and that tells me this will most likely turn sideways into a range tomorrow morning. Knowing this, the market is bearish, but I don't want to sell into these lows right now, so I'm better waiting to sell high, sell above the range high with a target back down at that measured move tomorrow morning. So again, just to recap here, I've got this strong move down, right? We always expect to see a retest of that low. So 12.5 is my major market objective. And again, this goes back to that same theory. Anytime we see a strong move in one direction, we're going to probably see a 2-legged pullback and at least a retest of that high, right? A second attempt to go higher. We talked about this at the beginning of tonight's newsletter, right? Same thing applies to downside, right? The bears had that big strong move down last week. We saw that just a huge correction on Friday, right? Thanks to non-farm payrolls. And now here we are screaming lower here. So where's their target? Their target is back down to retest that low, right? That's that 12.5 area. So the concern is we're getting a little bit too close for comfort down here, right? We're a little bit too low to sell at this point, right, on the gold. At the same time now, I'm also watching this potential trading range here. And so now we're kind of screeching to a halt right now because there really isn't a lot of open space here. If I zoom back in now, Let's get rid of this channel here for a second, because that channel is really not that important at this point now, right? We get that strong move down again, right? Strong move down. The bears go up, and what do they want to do? They want to retest that low. Did they do it? Yes, they did. What happened at that low? Did they push through the low, or did they take their profit at the low? They took their profit, right? You can easily see the sellers, right, took their profit, and I would assume are getting out of positions to sell high. So we got two big red flags in the chart right now. The first red flag is we're way too low. We're way too close to that 12.5. The second big clue is we get a strong move down. We've retested the low, that short-term low, and we're seeing profit taking. That looks like a double bottom in the making. What do we look for? What do we call a bear market that double bottoms? A trading range, right? What do? We sell the top of that range. How do we sell it? With a trading range, a 2-try rule. 1 try, 2 try, failure, back down in. And if we get lucky on it, failure and then pull back down in. It's always a bit of a tough one to see if you get that pattern, right, to get you in there. So again, we're looking to sell off the top of that range, right? Price goes higher, 1 try, 2 try, moving average comes over, right? Failure, you can sell into that failure because it is a bear market right now. Don't chase after it though as it goes lower. Wait to sell this, right, as it goes higher. So again, it's a spike and range pattern. It's basically a trading range. And how do I know it's a range? Because anytime we see a double bottom in a bear market that we're seeing right now, and again, this may keep going lower. I'm going to plan for that in a second as well. But if we do bounce higher here, though, now we know 1 try, 2 try, failure, strength, pull back, right back down to retest that low. Now, what if we keep going lower here, right? What if we keep going lower? What if this market keeps on going lower here? Then what do we do? Well, now that trading range really isn't much of a range at all. What I'll do is I'm going to mark up those lows, turn this now into a spike in channel, and look for that sell, right, with either a trap pattern, a pullback failure pattern, right, and of course a bear pullback pattern. So a couple different options here. Right? Again, it'll be a trap pattern, it'll be a buyer failure pattern, and it will be, right, a bear pullback pattern as we come off that high. So even if we do roll lower here in the short term, I'm not going to give up on my quest to sell at resistance. Right? You know, I always talk about those small hinges, right? Swing big doors. And of course, that metaphor, basically, to me, it means it's the little things that I do that make the biggest impact. And the little things, such as always making sure you're going with the momentum, always making sure, right, that you're selling at resistance when the market's bearish or buying at support when the market's bullish. We have a bear market. If we go lower, that doesn't give me the green light just to sell as we go lower. I want to wait for that move to pop up so I can sell off that high, right, tomorrow morning. And then last but not least here, how do we reverse? What does a reversal look like? It could be relatively easy here. We've got that strong move down. We know where the bears are trying to go. I would imagine this would be a 1 try, 2 try, and then reversal, right? It'll be a 2 try rule. And again, I know I talk a lot about the 2 try rule. Grab that free trading course in the upper right hand corner or in the description of this video and grab that free course and learn more about how we use that 2 try rule. The bottom line though is a reversal must have what we saw back here from last Friday: strength, pullback, and strength. In other words, we have a bear market. For this market now to turn bullish, I need to see it go strength. That will bring the moving average up. I want to see a pullback to the moving average, and then I want to see another strong move higher. Now, this is not drawn to scale. This could easily happen right here. Strength, pullback, strength. The key is that second leg. Does that second leg really jump? Because if the second leg jumps, what it's really broadcasting, what it's really screaming at us, is the sellers have walked away. When we get that strong leg higher, that strong second leg higher, it basically says all these sellers who are still in the market or holding positions open still, they're getting out for whatever they have left on that trade. At that point now, I find that new channel. I find that new channel by drawing off the highs. This creates usually a spike in channel, right? And that spiking channel now, I'm going to buy that pullback off of that low using a seller failure, a bullish pullback, maybe a trap pattern if we have the option on it, and the target will be going back up to retest that high at 1228.5. So now we've got a good plan, right? We know if price goes up, we know if price goes down. We also know what to do if price reverses or what a reversal would look like. And we know that when the market's bearish, we got to be a seller at resistance, right? It's not going to be until the market turns bullish on that strength, pullback strength, that we can then start looking for those buying opportunities. And again, a great example here of how we have a strong move down from last week. The sellers are trying to retest that low, knowing where the market is trying to go right now. It tells me I'm way too low to sell down here. Combine that with the same, almost the same information. Strong move down, not a major, right, but a minor example. Strong move down, pulls back, right? We see green candles here. They've reached their objective. Now it's time to wait. Do we go lower and then wait for a new channel here? Or do we go higher and call this a range and failure back off that high? Really, really great example there on the gold. And don't forget, we'll be trading this strategy on the gold tomorrow morning at 8 o'clock Eastern time. Look forward to seeing you there with me. How about some euro? Euro is bearish with a channel, a measured move, and rising resistance trend line on the chart this evening. The bear channel tells me to sell off the highs for a target going back down to that low. The measured move tells me to avoid selling into this support level, just below 15, right, 750 area there, while using the next measured move as a target if the sellers can push through. Oh, and that rising trend line, right, this little guy right here, it's a small one here. I'm going to zoom in a second. That trend line right there, that trend line tells me I can use that trend line for selling opportunities, right, up at resistance tomorrow, right? That can be used as a level of resistance. Okay, so three main clues here. First of all, we've got that bear channel. Bear channel looks pretty good. It could be better. It's basically a spiking channel, right? We have this big, strong move down. We're trying to go out into this channel right now. It might be a little bit, right, a little bit flatter there. If you want to call it flatter, that will work as well, right? A little bit flatter channel there. I always like to draw off these two lows, and that clearly lines up there at these highs. So I like the channel the way it is. That channel tells me I want to sell off that high, right, and bring it down to that low. At the same time, though, one leg, two legs, right, three legs. So again, we've got a measured move area sitting here as support. If we can break up, I can sell down to it and then try to hold that runner down to that next measured move. That could be another measured move here. And again, that will depend on how far we pull back off of these lows right now. And then again, that trend line can be used here now as a level of resistance. So what if price goes up? What if price goes down? What if price goes sideways? What's the plan here? If price goes higher here, again, I want to sell the top of that channel, right? I like to use that as a two-legged pullback pattern, selling off that trend line, buyer pullback failure into a bearish strength. Bearish strength, of course, now. I'm waiting for that bear pullback, right? Here are three easy patterns. If we can get them, it'd be great to get them. One is what we call a two-legged pullback pattern or trap high using that trend line. Two is going to be, because it's a bear market, I can use buyer failures. And then three is that, right, is that bear pullback pattern, right? I love to use these prior support trend lines as a level of resistance. I call these reversal lines. Reversal lines have so many different ways you can use them. Again, grab that free trading course in the upper right-hand corner to learn more about reversal lines, right? Or grab that link in the description of the video tonight and learn more about those, right? Those reversal lines there. But that's going to be a key way to use that reversal line for a trap high, then let those buyers fail, right, at the moving average. And again, this is nothing new here, right? It's a one try, it's a two try, failure back down, right? It's a one try, it's a two try, failure back down. We're ultimately now looking for the same pattern again, up, one try, two try, failure back down. Now, what if we go sideways here? There is potential we're going sideways. We got what looks like a double top there. Maybe we go lower here. We go sideways here. You know, again, I'm kind of playing ahead of the game here. What if we go sideways here? What if we find ourselves, right, just trading chop, 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 chop? At that point, right, it's a bear market. Whenever we have a range, we look for what? The 2-try rule. 1 try, 2 try, failure back down in. Nice and easy there. 1 try for the bulls, 2 try for the bulls. Once those bears try twice, we're looking to sell that sucker back down into that trading range. What else here? What if we go lower? Right? What if we go lower? If we go lower, we got to worry about that measured move. So if we go lower, I've got to see what I call the fake out, breakout, pullback. That's going to be a strong move down. How strong? Strong enough to get that moving average below that measured move. And then here's the key. It's a 2-legged pullback. I want to use that measured move as resistance. I want to use the moving average as resistance. Again, I call this the fake out, breakout, pullback pattern. It's not the same as your normal breakout pullback. It's a strong move down and a 2-legged pullback, a 2-legged correction back up into that measured move, back up into that moving average, and that'll be our next leg lower here down to that measured move. And then the last but not least, the only other option is, again, we got it going up and failing back down. We got it going sideways, trap and fail back down, going lower here, right? We wait for that pullback back down again. What else we got here? How about a bull market? How do we turn bullish? Look back here. Look every time the market's gone strength, pullback, and no strength through, right? See how the market has failed to take back control? Strength, pullback, strength. We have to see that very strong second leg higher. We didn't get it here. We didn't get it there. And you can see anytime it fails, right, if we run up here, strength, pullback, if they can't hold this and go higher, it's going to collapse back down, and we're going to sell this sucker right back down, right, to retest that low. So strength, pullback, strength. At that point, I'll find that new channel by drawing off the highs. That'll be pretty much all you have to work with, and then we'll look to buy off of that low with that target, right, up around those highs, right? So big target there waiting up around that 16,700. We got a great plan here for you guys. We got the bears in control. We're ready for up. We're ready for down, sideways. We're ready for a reversal. We know exactly what we need here. All we need now is a little bit of time to see what this market gives us. Now, don't forget, we've covered a lot in tonight's video lesson. I want to encourage you to learn more. Dig into the description of this YouTube video. All the important links are right below the video in the description. Grab those links. Head over here to the website at schooloftrade.com. Grab our free trial. I'll send you a free pass to come out and join me as a guest in the trade room. Grab the beginner, intermediate, and advanced membership levels, right? We got great classes, whether you're brand new at trading or whether you're an experienced veteran trader. I've got you covered here at School of Trade. I've always got a place, whether you're brand new or a seasoned veteran. And if you have any questions, hit me up on live support. Call the toll-free number right on the homepage of the website, right? I'm always looking forward to speaking with you and answering all your questions here every evening. Again, grab that free trading course, study hard. That way you can make the most of our time every night in this newsletter. And that'll wrap things up here for tonight's newsletter. Tomorrow morning, 8 o'clock Eastern time in our trade room. If I don't see you guys tomorrow morning, come back and see me again tomorrow night for our same time, same place for the next edition of our nightly newsletter. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye.